Robo-advisor or all-in-one ETF. Whether you're a beginner or experienced investor, whether you have less than $1,000 or a six-figure portfolio, either one of these passive investing methods can be right for you. Individual stocks require a lot of time, and even with that time spent, it's proven that most investors still can't beat the market long term.
Don't even try it, bro. Don't even try it.
So since you're not Ray Dalio, let's get into the video. What is a robo-advisor? It's an automated investment platform that provides a computer or algorithm managed portfolio. How does it work? Once you sign up with a robo-advisor, you fill out a questionnaire. Then they will suggest a portfolio for you based on responses given. Then you deposit money and they will invest in the model portfolio you choose. What is an all-in-one ETF? It's an ETF that's made up of multiple ETFs that can make up your entire investment portfolio with the desired asset allocation. How does it work? These ETFs are traded just like any other stock or ETF, so you'll need to sign up with an online broker. Then you'll need to deposit your funds. Once you do that, you'll need to do your own research to see which one of these all-in-one ETFs is right for you. Once you find it, search it up and purchase shares. How are these investing methods the same? Both methods provide rebalancing of your asset allocation. This is needed because over time, your portfolio's asset allocation will drift due to market fluctuations. And both platforms provide a one-stop solution for your entire portfolio, completely diversified and with the right asset allocation for your needs. How are these investing methods different? The first difference between a robo-advisor and an all-in-one ETF is that they require different platforms. Usually, robo-advisor platforms tend to be more beginner-friendly and easier to use, while online brokers can be beginner-friendly but are a bit more sophisticated. Both platforms can provide automatic deposits from your bank to your investing account. But the difference is the robo-advisor will automatically invest every cent that is deposited. With the all-in-one ETF, you'll need a platform that supports recurring buys and fractional shares to get the same automation as a robo-advisor. Currently, Wealthsimple is the only broker that can provide both these features. If your platform doesn't support recurring buys, you'll need to log in and purchase more shares every time you deposit funds. With this, you'll need a bit of understanding of order types like market buys and limit orders. If your platform doesn't support fractional shares, it's likely you'll have a small amount of funds that can't be invested. For example, if you auto deposit $50 every week, but the ETF you want is $30, you'll have $20 not invested. Because of this, you may be more limited to how much you should auto deposit. The next difference is with reinvesting dividends. The robo-advisor will automatically reinvest dividends. The all-in-one ETF won't. That being said, it's easy enough to set up a DRIP, a dividend reinvestment plan, with any broker online. But once again, without fractional shares, there will be funds not invested till you have enough to purchase a full share. Another difference is tax loss harvesting. Some robo-advisors will provide this tax strategy for free. If they don't, it's not possible to do it at all. With an all-in-one ETF, it's always possible to do, but doesn't always make sense to do it. You'll need to learn the ins and outs of this strategy if you plan to do it yourself. The next difference is the fees. With a robo-advisor, there are three main fees you'll likely incur. The management fee, which can range from 0.2% to 0.8%, with the average around 0.5%. This is the fee paid to the robo-advisor. Be aware that this fee is plus tax. The next fee is the ETF MER fee, which is usually around 0.13%, but with specialty portfolios can be as much as 0.5%. This fee is paid to the ETF provider. And then there's a currency conversion fee, which will depend if the portfolio is holding USD ETFs. But some robo-advisors will bake this cost into the management fee. As for all-in-one ETFs, your fees will depend on the broker you choose. Commission fees can range from free to $10 per trade. Annual fees can range from free to $100. On top of this, there may be registered account fees, transfer fees, and other fees you may need to worry about. Now, it is possible to avoid these fees altogether, but it will depend on the broker you choose. With Wealthsimple's trading platform, you can easily avoid them. With other brokers, you'll need to do your research to see if these fees can be avoided according to your strategy and portfolio size. Now, there is one fee that cannot be avoided, and it's the MER fee charged by the ETF provider. This fee is usually around 0.2 to 0.25%. Although it's double the MER fee of robo-advisor ETF fees, it's because the management fee is included in the costs. Let's do an example of these fees. Let's say you have $10,000 in an 80% equity and 20% fixed income portfolio. With Wealthsimple's Robo-advisor platform, this will cost you around $63 a year, plus possible currency exchange fees. With Wealthsimple's trading platform, the all-in-one ETF VGRO will cost you around $24 a year, since there's no other fees to worry about. So this ETF is 2.6 times cheaper than the equivalent Robo-advisor. If the portfolios were the same, the ETF would perform better because of less fees. In conclusion, a Robo-advisor is completely hands-off with no strategy or skills required. It's as passive as it gets, with the least amount of resistance to invest, and eliminates the human emotion that can sabotage your portfolio. But this all comes with higher fees and possibly lower returns. All-in-one ETFs are probably the second most passive way to invest. Although investing with this method is relatively easy, there is some strategy, skills, and knowledge required in order to keep your fees cheaper than robo-advisors. Also consider that you must be more consistent and more disciplined in order to stick with the plan and not veer off course.
Aerotime International. It is a cutting-edge, high-tech firm out of the Midwest.
So ask yourself, do you mind the extra costs of robo-advisors to save on time, or is the extra time spent on all-in-one ETFs worth the lower fees? With a smaller portfolio, the robo-advisor seems more attractive. With the larger portfolio, the all-in-one ETFs seem more attractive. If you want to continue learning, check out one of the videos on the right of the screen. Thanks for watching. Until next time, keep making money moves. Peace!